Hello friends, and welcome back. In today's episode, we are diving into one of the hottest topics in this price action course. It's a crucial topic because it helps a price action trader identify key price levels and make decisions about entry, exit, targets, and stop loss. Support and resistance are some of the most important factors that can make the difference between success and failure in trading. Support and resistance are specific price levels on a chart that attract maximum buying or selling liquidity. Support is a level where you can expect more buyers than sellers. Conversely, resistance is where you can expect more sellers than buyers. As the name suggests, resistance is something that prevents the price from rising further. This is the textbook definition you'll find in any standard trading book. But why do some price levels behave this way? We have talked about how the stock market runs on demand and supply. It's because of this concept that certain price levels act as barriers, while others boost prices. Let's take an example. Imagine a stock trading at 150 rupees. An institution believes the stock will perform well in the upcoming quarters, but its current price is little bit higher than its fair price. They want to buy at 125 rupees instead of 150 rupees. So, they push the market down to 125 rupees, where they quietly build their position. This level, where demand is met and prices start rising, is called the support level. The support level can also be seen as the price point that prevents prices from falling further. It's an area where large buyers step in. Because of the large number of buy orders and the lack of sellers at the support level, prices begin to rise. A price level is called a support level when it forms below the current market price. Now, let's move forward with the same example. A few months later, the price rises from 125 rupee to 170 rupees. At this point, the institution decides to sell and make a profit. They do this by placing large sell orders, ensuring that there are enough buy orders at their desired selling price, so they don't lose profit. These levels seem to prevent the price from rising further, making this a resistance level. Here, the number of sellers exceeds the buyers, causing prices to drop. A price level is called a resistance level when it forms above the current market price. For any trader working in any time frame, it is important to identify significant price levels where some price action occurred. Using the price action technique to identify these levels can lead to more successful trades. Let's discuss a simple 5-step process to identify support and resistance on your chart. These steps are: 1. Open the chart. 2. Zoom out the chart. 3. Plot key price action points. 4. Connect the points and draw a line. 5. Plotting support and resistance zone. Let's break down these steps. Step 1 is open the chart according to your trading strategy and trading time frame. If you are long-term positional trader, your trading time frame should be weekly or daily. For the swing trader, that should be daily or hourly. Intraday trader may use 30 minutes or 15 minutes time frame. Scalper generally uses 5 minutes or 1 minute time frame. Step 2 is to zoom out your chart in higher time frame. For example, if you are a swing trader, trading in daily candle, zoom out your chart in weekly candle. Similarly, if you are an intraday trader, trading in 15 minutes candle, then zoom out the chart in 30 minutes or hourly candle. Step 3 is identifying key price action zones. A price action zone is a point on the chart that stands out. If a level catches your eye, it's likely an important one. You can identify a key level if the price hesitates after a short up move, hesitates after a short down move, or shows sharp reversals at a specific price point. Step 4 is plotting a horizontal line. Connect the identified price action zones with a horizontal line. Adjust the line to get the maximum number of touches. The more touches, the stronger the price level, which will act as major support or resistance. Step 5 is plotting support and resistance. Many traders make the common mistake of approximation risk. Remember, the market respects a range of related price levels, not just one. Therefore, instead of drawing a single line, represent support and resistance as an area or zone. How reliable are support and resistance levels? While they can signal potential price reversals, they don't always guarantee it. Don't rely on a single confirmation, like price reaching support or resistance. Instead, seek more confirmations. For example, use price action candlesticks with support and resistance to create your own trading platform and start paper trading with this system. In upcoming episodes, we will continue discussing support and resistance in advanced level. It is very important and extensive topic requiring deep understanding to become a successful trader. If you found this helpful and want to learn more about the stock market, subscribe to my channel, Towards Samriddhi, for more insights on the stock market. I would love to hear your thoughts on this tutorial and what topics you'd like to learn about next. Please comment your valuable thoughts. I'll be posting more educational and informative content. Don't miss out, hit that subscribe button and join me on this exciting journey.